What up, guys? So Thursday was a strong day. Basically, everything went up except interest rates and the dollar, which I thought might happen. The markets also went up, banks went up. I always expect them to take a drop, to be honest. I mean, almost regardless of technicals, which sounds silly. It's just the fundamentals are so alarmingly poor, but they went up, not the biggest shock in the world. Although I'd expect the Russell and the Dow to have done more since they've been crushed more. But the S&P and the Nasdaq have been so strong lately, so that's somewhat expectable. Let's take a look. Let's take a look at the S&P. Close the high of day, back into this channel. For me, resistance, the only real resistance is 430 on the S&P. So, I mean, look, it looks like it wants to go there. Today we have NFP results, data, so that can just depends how they come out. It can either send it pretty much up towards 430 or just back down towards, the 410 zone, let's say. Quite a bit of support on the way down. I'd say 410, then this horizontal 404 and the ascending would kick in around there too. So that's the S&P, Nasdaq, just like the S&P, right back up. I mean, a lot of this was due to Nvidia. I think that part is done now, so you can't expect Nvidia to carry the Nasdaq higher, but it'll go up with the Nasdaq, of course. So next resistance, I mean, yeah, for me it's 370. You may have a little stop off at 360. Nice round number, also a little bit of a gap zone, so maybe 360, 356, 360. That could be a little zone. Yeah, that could be a zone. Actually, that would make sense. Otherwise, I can't believe it. 370, the next level is the absolute highs. And to be honest, the European markets, the DAX, the CAC, the FTSE, okay, they'll probably be up to date to make up for the US markets, but they're off their all-time highs. I always say they've already made new highs, but they've come off those highs. So it's probably time to pay attention to those again. There's the CAC. It's really the DAX that's probably the most important. They're pretty close to their highs, some of them. But anyway, just going to pay attention to those a bit more. The Dow Jones, by the way, excuse the hay fever. The Dow Jones still hasn't cracked outside of this descending. So still not as bullish, obviously, as the S&P and the Nasdaq. But if the S&P and the Nasdaq make another green day, you could start to get the Dow closing above 33,000, let's say 200. This mini little zone that it hasn't cracked above. You see what I mean? That little horizontal, that's a poor line, but you know what I mean? This high here, if you close above that, it would also be a close above the descending. I start to get very, very precise about it, if you see what I mean. So a little close above 33,200, I think would signal maybe it's ready to go up here. Oh, and for the downside, of course, you want to really close below, well, 32,500-ish. That would really do it. So, I mean, this is usually quite a bullish chart, but look, again, the S&P and the Nasdaq have made big moves. If we start to go down, the Dow will look very weak and start to go much lower. The Russell also one of the weaker markets. And that's not the best. I mean, look, it's holding support, but that really needs to close above very simply 180 before just signaling a move much higher. And I don't see that happening. The only way I can see that happening is really if the Nasdaq ends up all the way up at 370-ish and whatever that equates to the S&P, 430. But that's a big move. And then they probably would want to retrace. And then you got the Russell trying to go back down here. The Russell just can't get out of it. And I think it's just, looking forward, and forward is just a drop. So, and I think the banking stocks also want to drop later. Let's look at the XLF. The XLF, just like the Russell, probably even weaker, just so weak. I mean, think how much the markets have moved up. Even if they move higher, the XLF first has to close, or just cross 33, and then 33.60, a close above there. And even then, that would be a big move up here. That would that would really require a lot of strength in the banking sector and the general markets. And even then, you're you're just hitting a descending line, a strong descending. So the banks would probably want to go back down again. For me, XLF is just so weak, so weak. So it's a matter of time until it goes all the way back down. KBE, the regional banks, they've been crushed even more. It's a stronger looking chart. You know, you want to close above the descending to move up to, let's say, 38. But look, the market's moved up so much. So it would require, you could have a strong move. 1 or 2 days, you could actually close above this. But again, you'd require strong market moves. And you can't really ask that much more from the markets. On the way down, well, first stop 31.9, 32-ish, and then 30.8. And I think we're going to get there, just like I think the Russell and eventually the Dow will go much lower and eventually break their bear market lows. Can't really see the Nasdaq doing that for some time. But eventually you get a massive move lower. I think it will happen. Finally, the KRE, to be honest, just like the KBE, you know, looks strong. I mean, the chart looks pretty good for a bounce. This is the type of chart I like to trade. But again, you need to know the fundamentals. The banks are not in good shape. Interest rates are still going up overall. And the market fundamentally and the banks fundamentally are not in good shape. So you'd really have to get a close above the descending. I don't see that happening given how much the market has already gone up. Okay, let's look at interest rates. Still the most important thing to look at in the markets. You know, we've retraced from this big move. I thought we might retrace one more day. We did. And now I think we're ready now to go up. I say that because of the 30-year. I'll start with that straight away. That's what I was looking for, a retracement all the way back down to not just breakout. So prior resistance acting the support, but the ascending. So for me, the 30-year yesterday tagged it perfectly. And now we're going to move back up slowly and then close above 4% and move higher. It might not be that smooth. There might be a little, move back down below the ascending, back up. But I think we are basically going to go back up and then close above 4% and keep moving. I'll look at yields the other way around this time then. 10-year, just following 30. So all the way back down, I think we're done. So move back up. You can see it's pretty good retracement. Pretty good retracement. So I think we're done there. 5 years, same thing. They're all following each other. It starts to get a little bit different once you get to the 1 year, but look at the 2 year, retraced, didn't go all the way back down to resistance because, well, simply the 2 year and especially the 1 year just don't go down as much. They don't retrace as much. They're stronger. They want to go higher. So the 2 years probably going to find support and basically go all the way back up to 5%. That will be crazy. The 2 years probably the most important one. That's what the Fed wants to follow the most. The 1 year, look at that, retrace, but it just, look at yesterday, actually ventured all the way up back here at some point. So I think 1, 2, 3 days, we're back up above 5.3%. So watch out for yields. They're done retracing. That's my point. Let's look at the dollar. And that also dropped. So I was saying how I felt the dollar had sort of topped. I was looking for a move to about 105, maybe just below 105. You've also got this descending line that I hadn't actually realized before. And I mean, look, we were hovering horizontally. There's a lot of resistance. You can see these daily wicks over here. And I did say this day, on the green day, I said, look, I think it's pretty topped. So, and then yesterday, we had this big drop. Obviously, I'm doing this video on Friday morning, so that's why we got this extra candle. But I'm very happy about that. Smash down. Now, this trend line here is nothing special. This horizontal one is just one that I put in like weeks ago because of this zone. Quite simply, it's an intermediary pit stop on the way up to 105 attempt. So I don't really expect this to hold too much, but it does make sense that that's where we went to yesterday just for the day. Today, I expect bigger moves, both directions, lower and higher. Maybe we go back down. You know what? We will. I reckon we're going to go lower. I'm talking about eventually like medium term, not medium term, the next couple of trading days, let's say, right? Like 3, 4, 5, 6, 7 trading days. We'll probably go all the way back down to 102.5. I just feel like the retracement is not going to be 1 day. But the point is, once we stop going down, which is before this low, we're not going to go all the way back down here, not straight away anyway. So once we go down here, let's say, then it needs to decide, okay, and this will probably be the most important moment. Do we go back up? And if we do, it's going to be like 3 or 4 days later, it's going to be hitting its head over the descending. So, imagine we do something like this, and then it starts to curl, and this will be very important because it's either going to go up or obviously it's going to go down. I'll tell you what, if it starts to go down, it's going to be very hard to get back up again because there'll be a lot of people just ready to smash it and hit those stops. And then it's kind of done for another big move lower. And like I'm talking about below 100, then it starts to get mental and emotional. And, we've got a 99 handle on it. So I reckon we go a little bit lower. Nothing too crazy. NFP is obviously going to move it. The Fed rate hike decision for June is going to move it. So it's probably going to coincide perfectly with big news day. But I think we're getting to a decision time, in the next 1, 2, 3 weeks. So, but I do think we go a little bit lower first. So yeah, for me, the dollar is the most important thing. I always say that interest rates are the most important. They are, but I could see the effect the dollar had on commodities yesterday, especially gold and silver. Because I feel like gold and silver overall, the last couple of months, literally couple of months, 2, 3 months, gold and silver have been moving in opposite directions of the markets and the banking stocks, except when the dollar comes into play. Because when the dollar was going down here, that really helped gold. But generally, when what really thrusted gold up was this banking crisis. But now, what's really moving gold is the dollar. So even though banks went up and the market was up yesterday, gold was up very strong because the dollar was just down. So I say that just to say that the dollar is really very, very significant right now for the precious metals specifically and commodities. All right, anyway, that's the dollar. I just think it's going to go a little lower and then it's going to be very, very important coinciding with news. Let's look at commodities. Copper's chart looks really like a lot like the other metals, gold and silver. So we had this nice bounce here on the horizontal after it flushed ascending. Now we're hitting resistance, so far today a little higher. I feel like, high 3.7s should be resistance. So yeah, high 3.7/3.8, this kind of zone. I'll just put this line in between both. So that sort of zone should be resistance. Let's see what the dollar does. If the dollar keeps diving, copper will go up, especially if the markets go up. Copper likes the markets going up generally. Natural gas, this is surprising me. Natural gas has surprised me for weeks. This move up, I was very happy. I thought, there you go, we're going to go to 3. And then we had a bit of a retracement. I thought, okay, we had a big move up, normal type of retracement. And now we've got this just 3, 4, 5 days red. This is just way too much. It's very rare. It's very rare for me to see this type of pattern in trading. Like this, if you're trading stocks, it just doesn't make sense. But it's a commodity. It's got its own supply demand. It's got geopolitical in there. But this is really, you just can't catch a break, So I'll just say this: there should be strong support down here between 2 and 2.2. There should be very strong support. So this should really go up from here. If this just kept going down, it would be very bizarre. So just going to have to give it more time. Remember to zoom out. Looks beautiful for a big move up long term. But doesn't look great short term. Could have a little bounce, but medium term, it's going to take a lot to sort of gather enough strength to go all the way up here and then break out. Anyway, I'll just give it some more time. Oil, big flush. Okay, the market moved up yesterday. The dollar went down, so we had a nice candle. So far, we're sort of keeping up the momentum, but it's going to take a lot to go all the way back up to 74. So what if the market starts to go down? What if the dollar stops going down? For me, oil, zoom out, doesn't look good. Does not look good. Looks like it wants to go all the way back down to 60, low 64s and then flush. So yeah, nice move yesterday, but a little too late. So still bearish. Oil, uranium, absolutely incredible stuff yesterday. I hated it. Absolutely hated it. And if you look at the uranium stocks, they were just insane. So congratulations. I have no idea why this big move happened. I'm sure other people do. It must be something to do with the sector. I actually don't know. No idea. Very frustrating to see that. Look at that close above this line here. Ventured higher than the last couple of times. This is like beautiful reversal. I mean, this is rare to see two very strong candles. Next stop, look at this, perfect. Next stop would be 21.75/22. If you can close above this descending, I mean, that's going to signal we are done. So I knew a decision was coming soon. I was hoping for it to go to the downside. I knew that fundamentals and long term it would go up, and it did it straight away. Look at that. Still not confirmed, but for me, that's as good as it gets, really. Just two massive strong candles. And if I just look very quickly, let's see uranium stocks, URNM. You can see, look at that. Same thing. I mean, it did bounce, in my opinion, because of the uranium stocks chart. But you can see next level a little higher. Some of these stocks, CCJ Aramco, look at this one, the one I wanted. I saw it yesterday. No, complete breakout of the descending, closed much higher than the descending, even higher than this zone. I mean, that's the next zone. CCJ is just going to the high 30s, 40s, done. I'm not going to look at all the other ones, but some of the juniors are still crushed, so there's a long way up to go. You could chase those and make good returns. Wow, some of them are really good. But again, some of them are still really crushed. So there's still a lot of money you can make in uranium. I want to take a look at that on the weekend, see if I can chase some juniors. I don't like to do that because obviously they're going to retrace hard. There's probably a reason that they're down that much. But anyway, uranium, can't ignore that. That was just a very strong, beautiful move. They deserve it. They deserve it. Yeah. Anyway, let's look at gold and silver. So, very nice move yesterday also. It was the dollar. I said, 1980 should be resistance. It was. Today again, we're touching it. We're there already early in the morning. It's all about the dollar, quite simply. NFP is obviously going to move it, so that will take over today. If we have a move up, well, it's 2000 because that was support over here, and then we flush below. So for me, it's 1980, which is roughly this line was supposed to cover like 1975, 1980. I should have made it thicker, but yeah, if we have a strong move, it's 2000. You want to close above 2000 to really say, okay, we're going back into the higher channel zone. If it's a move lower with NFP, I think ascending will act as support. So at this point, 1950 probably, you'd want it to close above that to say, okay, we're back in the ascending. To be honest, we've always been in the ascending because this candle here, in fact, the ascending was perfect. Just zoom out, look at that. It's absolutely beautiful. I remember having this line before we ventured down here, and I said the ascending should act as support. So, and it did. So that's just very happy about that. But yeah, I say 2000 on the upside, 1950 on the downside for today if there's a big move. So those are your levels to watch. Otherwise, we're just hitting our head on resistance at the moment. Well, actually, we're just above it, 1980. So very good move for gold. Silver, you'd expect that. So obviously we broke out of this descending with a nice move higher. And I did say 24 was resistance for silver, which is basically where we are now. What I didn't think of is if we go even higher. If we go even higher, so what is the equivalent of gold's 2000 for silver? I would say it's quite simply 2000 for silver. 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 2000 for silver 24.5. You know, can we close above 24.5 or just above 24.5? That would probably equal gold at 2000. And if gold wants to start making its move back all the way up to the 2050 or the 2070-80 zone, that will equal silver all the way up here, the 26 zone. So for me, it's very simple. Prior resistance. You can also see here support. Bam, 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 3, 4, 5 times on the wicks. So 24.5. The descending line, which was really important before, has been deleted because it's obsolete. You know, it was useful during this period to see resistance. Okay. We broke out of it. We came back down and back tested it a little bit, but we did more than back test it. And that's why I deleted it. It was valid for 1 or 2 days. And then silver had its own, it was in no man's land. And I was judging silver based off gold. And I think that was the right thing to do. And I think it worked. And by that, I mean, gold found support here on the ascending. And that's when silver stopped going down and started to go up. So I'm really happy about sort of choosing those technical indicators. And now, like I said, 24 is resistance, nice round number. It also happens to be sort of the high zone here. So if we go up 24.55, let's say, should be resistance, should equal gold at 2000. And then if it goes even higher, obviously that'll take several days, then $26 on silver equals the high of gold, 2050, 2080. On the way back down, so obviously I said gold 1950, if you expect the ascending to continue its support. So imagine today is a down day because of NFP. Look at the low of these two candles. It's basically 1950 plus the ascending that keeps rising. That'll also equal around 1950. So 1950 on gold. Silver, though, if we have a big red day, would this descending backtest work? Maybe. But if gold goes down to 1950, you'd expect silver to go back maybe a bit lower. Not sure. 23, worst case scenario. If there's a massive red candle in silver, 23. I'd say between 23 and 23.3. Just put it out there. All right, miners. Miners were good. I'll start with GDXJ because GDXJ hit its head on what I consider support. Look at the low here. And then we flushed below it and we back tested it there. So for me, and it tagged it perfectly. I had this line in for days. I mean, when I looked at the GDXJ chart, it had already tagged it actually. So I think GDXJ was perfect. Again, the ascending worked perfectly. It's perfect. If we go higher, if gold goes to 2000, for me, quite simply, GDXJ is at 40, a nice move up to the big round number. Also, a little bit higher than that, you start to hit the high of this candle, which coincides with the descending. So for me, between 40 and the descending, so let's say today the candle will be there. That zone will be resistance, no doubt. But that would be quite a big move, to be honest. You'd expect a little retracement if that happens. And then you'd expect 39 to be support if we even get there today. So next week, it would be 39 support. But if we go down, the ascending, massive candle down. I'd expect support around here. Yeah, I suppose that is possible. So yeah, those are the two zones to watch today. GDX did not tag its prior support, but it was, it's just the way the chart is, it's a little bit higher. So today I'd actually expect 33 roughly, just a bit higher, maybe to be resistance. And then if we have a drop down, so let me just put that in, I expect 33 to be resistant. There is no descending here, just the way the chart is. If it goes even higher, I don't think it will, but let's just say there, bam, bam, just nibble a little bit out because it's a big bounce. Obviously, it's going to come back down again. So the little nibbling I added on the way down, on the ascending especially, I'd be selling those two there. If we have a big move down, quite simply here, not just the low of here, but also the ascending coming in. So that's the resistance and support on GDX. And that's it. One final comment is Bitcoin. You got the market going up. Okay, today so far it's up 1%, but you had the market up yesterday. Just look at yesterday's Thursday candle. Everything was up. Perfect environment for Bitcoin to at least be up, but it wasn't. You had Nasdaq up 1.5% or whatever. You had the dollar down, right? Bitcoin's supposed to be anti-dollar, inflation hedge, whatever. You had rates down, which generally helps everything. It should. That's not really a catalyst. But point is, you had Nasdaq up, dollar down, gold and silver up. Bitcoin's supposed to be on par with gold and silver. So it had all the reasons to go up. It had already retraced this move. Think about it. We had a candle all the way down there the day before. You'd expect a green day, but it was red. So I know sometimes assets work on their own charts and crypto is in its own world sometimes, but think how much the Nasdaq's gone up. Bitcoin has not moved up that well, I think. It hasn't moved up as well as gold. Gold had, and I'm not talking about percentage, I mean relative percentage. Given how much Bitcoin's been crushed, you should expect a bigger move up in Bitcoin if it's really anti-banking, because gold did much better, relative as an asset. So Bitcoin did not move up that much when it was shining as an anti-bank, anti-market trade here. And it's been crushed a lot. It used to move up with Nasdaq. Nasdaq's bounced a lot. So, I mean, overall, I would have expected more from Bitcoin. And I just feel like I feel like it's just going to keep going sideways in this little triangle here and then basically close below 25,750 and start to move all the way back down to this zone. Maybe find support around here, like low 20,000s, and then we'll see. But if there's a big move lower in the markets, which I think will happen, wave 3 of the Nasdaq, let's just take a look at that and make it simple. So once Nasdaq is closing below this ascending and starts to move lower, like down here, below 300, you can imagine it a lot more easily with the Russell. Just imagine the Russell, just 3 or 4 bad days, banks go down, rates go up again, whatever. Here we are under 160 on the Russell. Very easy to do. Give that 1.5 weeks, it can happen. You've got the Dow just sort of going back down here. Nasdaq finally cracking and going below 300 very, very quickly. These things can happen. Look at this, S&P obviously follows, flushing, closing below its ascending, going back down in this zone and towards its lows, whilst the Russell, by the way, is starting to puke. What do you think Bitcoin's going to do? Seriously, Bitcoin's going to be down here and just closing below this ascending and like below 20,000. One more flush in Bitcoin, the capitulation, because imagine the Bitcoin traders, and I'm not really one of them. I own a tiny bit of Hive. I added to it here on the way up, didn't sell much. I've got this sort of small position where if Bitcoin goes all the way up to 70,000, I make good money. If it goes down, I lose very little in the grand scheme of things. And I think it will bounce hard down here. So I'd love to add heavily, but I still think we're going to flush. And if you imagine the mentality of Bitcoin traders, everyone's making money in these other assets. Like look at us in gold and silver. We've made good money. Yes, it's dipped a little bit, but gold's basically at 2,000. 2,000, amazing. Nvidia, people in the Nasdaq making good money. Meta, Apple. It's almost like there's no bear market. It depends what you bought, but even for holders of Apple and some other stocks, I mean, some of them are really close to all-time highs. And here they are just sort of not making any real progress. And it looks like the best is behind them after this 30,000. So anyway, I think you've got another flush coming and let's see. All right, anyway, that'll do. Good luck today. Let's see what the NFP does. I'll make another video, obviously, after the close.